Happy morning, happy afternoon, happy evening based on what time you're watching this lecture. Friends, now let us discuss your amendments in your GST which are relevant for your May 2023 exams. Basically, we'll be discussing all the provisions of act or rules or notifications which came between your 1st of May 2022 to 31st of October 2022 which are relevant for your May 2023 exams. Please understand that this lecture would be helpful for all those students who have attended the lectures earlier, whether of mine or some other faculty, or they have gone through the law earlier but not sure of exactly whether what they are learning is updated or not. For them also it will be very helpful, and we'll be discussing the provisions in the chapter sequence which is given in our main material study revised crack. But even if you have not seen that material, no problem, you will be easily understanding what are the amendments which are there in this particular discussion. Now, starting with the chapter taxable person, which includes your reverse charge mechanism. So, we will be clubbing this chapter taxable person, including your reverse charge mechanism amendments read along with your exemption, because the amendments which have come out in your RCM and exemption are interconnected. So, we'll be clubbing that both and we'll be seeing those entries. Basically, when you talk about your taxable person, including RCM, that is RCM entry, the amendment has come in your section 9.3 read along with notification number 13/2017 CT rate. Section 5.3 of IGST Act read along with notification 10/2017 IT rate. So, the same provision 9.3 of CGST Act read along with 13/2017 CT rate. 5.3 of IGST Act, section 5.3 of IGST Act read along with notification 10/2017 IT rate. And the exemption that we are going to discuss is discussed in your notification 12/2017 CT rate for CGST and SGST. And 9/2017 IT rate for your IGC. Basically, the provisions are the same. The reference number are different. Whether it is interstate supply, IGST provisions you have to refer, or intrastate supply, CGST provisions you have to refer. Concept would be the same. Now, let us first focus on your GTA. Right. So, first discussion is all about your GTA. Then we'll be discussing something about your government services. Finally, we'll be discussing something about renting of a residential dwelling. Now, when you're talking about your GTA entry, there's an amendment in RCM entry. Also, there's an amendment in your exemption. Right. So, let us consolidate both. If at all you see your exemption entry with respect to GTA, what have they amended? Exemption entry with respect to your GTA. They have said that entry number 21 has been amended. They have said that when you're talking about your goods transportation agency, service provided by your goods transport agency in your entry 21 by way of goods carriage, when you're talking about the exemption based on the value, if it is the entire carriage, the exemption was 1500. If the amount was up to 1500, if the amount was up to 1500, then there is no need of GST, it was exempted. If the value of the entire carriage, the consideration charge for the entire carriage, if you are booking the entire truck and the value is up to 1500, there was an exemption. Now that exemption is removed. If at all you are not booking the entire truck, but you are one of the consignee in that entire truck, then if at all the consideration was up to 750, which means does not exceed 750, it was exempted. Now that exemption is removed. So now, when I said the exemption is removed, it means it is taxable. You need not see whether the amount paid for the entire truck is up to 1500 or per consignee it is up to 750. You need not see that particular point. Value based exemption. Your value based exemption is no more there for your GTA. That is with respect to exemption. Coming to your RCM entry, what amendment they have brought? Now, previously RCM was applicable. When it was applicable? If at all in a scenario where you're talking about service by GTA who has not opted for 6% CGST, 6% SGST, which means who has not opted for 12%. The 6% of CGST, 6% of SGST, in total who have not opted for 12 percentage, it would have been covered under RCM. So for RCM to be applicable, GTA should not have gone for 12 percentage. Now they have said that whether GTA is selecting 12 percentage or not is no more relevant. He may select 12 percentage, still it may be covered under RCM. He may select not select 12 percentage, still it is under RCM. So the rate selection by GTA is no more the criteria. Plus they have added a proviso where clearly they have said that when FCM will be applicable, when GTA himself will be taxed. So what have they added? They have said that provided further nothing contained in this entry shall apply. When I tell that, when we are discussing about RCM entry and I tell that this would not apply, it means that it would be FCM. When GTA has taken registration under the GST law and it is opting to pay the tax under FCM, condition number 1. So it should have taken registration plus it is opting to pay under FCM, and on the tax invoice which it is giving to the recipient, it should give a declaration as given in Annex 3. What would be that Annex 3 content? That I have selected for FCM. So on the invoice it should give a declaration that I have opted for my forward charge mechanism. I'll be collecting and paying tax to the government, not my recipient. Now, if you were to understand GTA amendment both in exemption and your RCM together, previously, when you're talking about GTA services, there was your person-based exemption, which means when you're talking about person-based, there are certain persons when GTA is giving to them, there's no GST. There were goods-based exemption, and there was your value-based exemption. That is 1500 for the entire truck or 750 per consignee. And balance, if at all it was not covered anywhere, balance category. So first you were talking about your exemptions. So you had all these categories for your GTA. You may be covered by person-based exemption or goods-based exemption or value-based exemption, balance. So in these three cases, there was no GST. And if at all you're talking about balance, there was GST. And there was another check. If GTA is opting for 12 percentage, then it was forward charge mechanism. If GTA is not opting for 12 percentage, then it was reverse charge mechanism. So if GTA said that I am going for 12 percentage, then it was FCM, otherwise it was RCM. Now what has changed? Change number 1. First they have said that forget about value based exemption. Now understand that your person based exemption and goods based exemption still is there. There is no value based exemption. So the exemption which was given based on value, the entire truck for 1500 up to 1500, which means less than or equal to 1500, or in a particular truck single consignee's value is up to 750, less than or equal to 750, it was exempted. That value based exemption is removed. So directly if it is person based category, it would be exempted. Goods based exemption category, it would be exempted. Balance directly will be taxable. Now when it is taxable, the way of your FCM and RCM has changed. The moment it is taxable, GTA, if it is telling that I am registered and I want FCM, then it would be FCM. And it has to give a declaration on the invoice. In other cases, it would be RCM. Which means whether GTA has went for 12% with ITC or 5% without ITC. That is ITC is for GTA, with ITC or without ITC. It is up to him. GTA is telling that I am registered and I want to pay under FCM. It will be FCM. Whatever rate it has selected, whatever rate GTA has selected, whether 12% taking the benefit of ITC or 5% without taking the benefit of ITC, That is GTA setting. If GTA is telling that I am registered, I want to pay tax under FCM, then it would be FCM, and it has to give a declaration in invoice telling that I have opted for FCM. I will be collecting and paying tax to the government, not my recipient. And if at all it is not doing that, then it would be RCM. So now selection of rate will not decide FCM or RCM. Rather, GTA will tell that I am registered, I want to go under FCM, then it would be FCM, otherwise it would be under RCM. So that is the amendment. First amendment is with respect to your exemption, and the second amendment is with respect to your RCM. Right, that is all about your GTA services. Now moving on to your government services. Basically in government services there is no impact on RCM. The wordings of RCM have changed, there is no impact on RCM. They just removed that wordings per se. Right, so there is no basically impact on RCM. It is an corresponding entry. Let us see first what is the amendment in your government services when you talk about your exemption. Then automatically understand that there is no impact on RCM per se. But they have amended that, but there is no impact. Now what are they trying to tell? When you talk about your government services, services by Department of Post. Services by Department of Post, in those, in before the exemption, what was there was, when you're talking about services of Department of Post, if at all, it is by way of speed post or express parcel post or life insurance or agency services to other than government, central government or state government or union territory, this was taxable. This area was taxable, which means other services by Department of Post was exempted. This area was taxable. Now they have said that what is taxable. They have not said what is exempted. Any service by Department of Post, it should not be a case of speed post, express parcel post, life insurance or agency services, and it should be a case where it is given to, it should not be a case where it is given to central government or state government or local authority. It means it should be these four services given to other than central government, state government, local authority, it was taxable. Now what they have done, they have removed this everywhere. Whether the entry number is your entry 6 or entry 7 or entry 7 explanation or entry 8 or entry 9, they have said that okay, we are removing that particular point because the thing is exempted. Now what have they done is, they have said they have brought out a new entry by the entry number entry 24C, and they are telling when it is exactly exempted. The services by Department of Post by way of postcard, PIBO, inland letter, book post or ordinary post, PIBO. Postcard, inland letter, book post or ordinary post where the weight is less than 10 grams, then in that case it is now exempt. In that case it is now exempt. So previously indirectly they said that this is taxable, everything else is exempt. Now they have said that no. What is exempt is clearly said, everything else is taxable. And basically whenever it is taxable it would be only FCM. So what have they done? Everywhere, whether it is your entry 6 or entry 7 or entry 8 or entry 9, 6, 7, 8, 9, they have removed that wordings which were talking about what is taxable and by the way what is exempt. Now specifically they have introduced entry 24C to tell that what is exactly exempt. And the corollary effect, the corresponding effect is there in your RCM. Basically it is not changing RCM, it is just telling that if at all it is service by way of Department of Post. Previously it was telling that service by way of Department of Post is not under RCM, excluding, because the language was government services is basically under your FCA, under your RCM, excluding. Now in that excluding, what they have done, by Department of Post. So by Department of Post was only the point that I am trying to tell. So if it is by Department of Post, it would be FCM only. So they have removed that reference. No, because earlier you're talking about specific services. Only speed post was taxable, your express parcel post was taxable, life insurance was taxable, agency services was taxable when it is given other than government. Now, not only they are taxable, other than PBO, that is your postcard, inland letter, book post, and ordinary post where the weight is less than 10 grams, everything else is taxable. Whenever it is taxable, it will be FCM. Whenever it is taxable, it will be FCM. So you can understand it this way. Before amendment, Department of Post. So you are talking about Department of Post. Before your amendment, what was the scenario? So Department of Post before your amendment, if at all you are talking about others, general category, and special. What was the special? Special was in a scenario where you are talking about speed post, express parcel post, life insurance, and agency services. Even when you are talking about others given to anyone, others whether it is given to government or other than government. Now special services, again, when it is given to government, when it is given other than government. Now understand that when you talk about your Department of Post, other than speed post, express parcel post, life insurance services, and agency services, whether it is given to anyone, it was exempted. And when you're talking about your speed post, express parcel post, life insurance, and agency services, when it was given to government, it was exempted. When it was given to other than government, it was taxable. And when it was taxable, it was under FCM. Now the fact is, when it is given, whenever it is under taxable, it is under FCM. Now this is all before the amendment. Now after the amendment, when you're talking about Department of Post, after this is all before amendment. Now after amendment, now things have changed. After amendment, what is exempted? What is exempted is only your PBO, that is postcard, inland letter, book post, and ordinary post when it is less than or equal to 10 grams. When the weight is less than or equal to 10 grams, only that is exempted. Others is taxable. Only and only that is exempted. To whom? Whether it is to government or not, other than government, there is no differentiation. If it is postcard, inland letter, your book post and ordinary post where the weight is less than or equal to 10 grams, then it is exempted. Others category, it is always taxable. Now you not see whether it is to government or other than government, you are not required to see. So whether it is to government or to other than government, it does not make any difference. Whether the recipient happens to be government or other than your government, it does not make any difference. If it is PBO less than or equal to 10 grams, that is postcard, inland letter, book post, ordinary post less than or equal to 10 grams, exempt. Others, it is taxable, and when it is taxable, it is under FCM. So if you see, there is no basic change when you are talking about FCM or RCM. It was always, if at all, previously exemption was much more. Now exemption is very limited. And previously, whenever it was taxable, it is under FCM. Even after the amendment, whenever it is taxable, it is under FCM. So amendment is only with respect to exemption, not with respect to RCM. FCM. Department of Post, whenever it is taxable, it is under FCM. But now, when it is exempted, things are different. It is exempted only in a case where you are talking about postcard, inland letter, book post or ordinary post where the weight is up to 10 grams. Only then it is exempted. Other cases it is taxable. The scope of taxable is increased. So that is this particular point. Right. So that is about your government services. Now moving on to your renting of residential dwelling, things have drastically changed. Again, the impact is because of RCM and exemption, both are interconnected. Now let us see first your changes which has brought in your exemption. Now there are two amendments when you are talking about, one in your entry number 12, one in your entry number 14. Now, what is the amendment in your entry number 12? They have said that when you're talking about renting of residential dwelling for use as residence, it was exempted earlier. Now also it is exempted, but there's an exception. What is that exception? If at all the residential dwelling is given to a registered person, if at all that same residential dwelling is given to a registered person, then it is taxable. So previously, if it is a residential dwelling used for residence given to anyone, it was exempted. Now if it is given to a registered person, it is taxable. It is taxable. So exemption is decreased, taxability is increased. One more change that has come out, or one more entry that has been affected, is they have removed one exemption when you're talking about hotel, inns, guest house, club, campsites. Basically, you're talking about going and staying, taking accommodation service in hotels, inn, guest house, club, or campsite for your residential or lodging purposes. You're going for a business trip or a personal tour and staying in a hotel, accommodation services. Previously, it was exempt if your per day charges, per room charges was up to 1,000 rupees per day or equivalent. So if at all the room rental charges was up to 1,000 rupees per day per room, 1,000 rupees per day per room unit of accommodation, then it was exempted. Now they have said that you go and stay in a hotel or inn or clubs or campsites or inns or guest house, whatever place you go and stay, whatever amount you pay, it is taxable. Now again, scope of taxability has increased. Scope of taxability has increased. So two changes they have brought in. One, you are talking about renting of residential dwelling for use of residence. Previously it was always exempted. Now it is taxable in case if it is given to a registered person. Previously, when you are going and staying in a hotel or inns or guest house or clubs or campsites, if at all the room rental charges per day per room was up to 1,000 rupees, it was exempted. Now that exemption itself is removed, irrespective of the room rent that you pay for the hotel. It is now taxable. Now, corresponding RCM entry, they have added a new RCM entry by the number entry 5AA. If at all you are talking about renting of residential dwelling, right? By whom? By any person, but to whom? To a registered person. The moment it is taxable, it is now under RCM. Renting of residential dwelling to a registered person is taxable, and when it is taxable, it is under RCM. It is under RCM. Now let us understand the impact. Basically, the impact is dual. So previously you are talking about renting of your residential dwelling. So things were very, very different previously. Now things are again very different. So renting of residential dwelling, when you are talking about for use as residence, previously you have to understand in this way. It was residential building was there, it was used for residence, it was not used for residence. Now you are talking about the same renting of residential dwelling. Again you are asking the same question, whether used for residence or you are not using it for residence. You might use it for office purposes as well, other purposes as well. Previously, if this is before the amendment, now this is after the amendment. Now previously, if it is renting of residential dwelling and it is used for residential purposes, it was exempted. And if it is not used for residential purposes, then obviously it was taxable, and whenever it was taxable, it was of FCM. Now, if it is renting of residential dwelling, if it is used for residential purposes, you need to ask a question. Whether it is to unregistered person or registered person. Please understand that now things have changed. If at all you are talking about renting of residential dwelling, that is the first criteria, used for residential purposes. to unregistered person, only this portion is exempted. If it is to registered person, now this is taxable and this is taxable under your RCM. This is taxable under your RCM. But if it is renting of residential dwelling not used for residential purposes, it is taxable. If it is unregistered person, FCM. If it is registered person, then it is RCM. If you see, things have totally changed. Exemption is now only on satisfaction of 3 criteria per se. It should be renting of residential dwelling for residential purposes to unregistered person. Only in that particular scenario exemption is there. In all other scenarios you will find it taxable. And when you find it taxable, in all other scenarios you will find it taxable. When it is under RCM, if at all the recipient is registered, it is RCM. If I tell the recipient is unregistered, and still it is taxable, there is a possibility. If it is renting off your residential dwelling, but not for residential purposes, then it is taxable. Even if you are unregistered person, it is taxable. When it is taxable, now it will be under FCM, because recipient should be registered for it to be under RCM. If you will see all the scenarios, so in one scenario no GST, other scenario GST RCM, next scenario GST but FCM, the last scenario GST under RCM. Right, now the scope of your exemption is very much reduced, and when it is taxable, it may be under RCM or it may be under FCM, depending on the criteria. If you are registered, then RCM, otherwise it is FCM. So that is one amendment. Second, you are talking about your hotels, inns, guest house, clubs, campsite, etc. Right. Previously there was an exemption if at all your room rent charges. Right. So if your value of accommodation, that is room rent charges, was up to 1,000 rupees per day per room, per unit of accommodation. Right, then it was exempted. And if the value of the accommodation was more than 1,000 rupees per day or equivalent per unit of accommodation per room. Now, before the amendment, you had a possibility of exemption, and it was taxable in other case. Right, if it is up to 1,000 rupees per room, that is per unit of accommodation, per day or equivalent, it was exempted. Now and if it is more than that, it was taxable. Now what have they done? They have removed this exemption. They have said that even if the value of accommodation, the value that you are going to pay for accommodation, is even if it is less than or equal to 1,000 rupees per room, that is per unit of accommodation per day or equivalent, even then it is taxable. Now there is no exemption. After the amendment. So that completes our discussion entirely when you are talking about exemption read along with RCM. Now we are talking about only exemption entries, not impacting your RCM entries. The first of the exemption entry is government services, which you have discussed when you have discussed your Department of Post. The second is your renting of immobile property, which you have discussed just now when you are talking about your renting of residential dwelling, and you are talking about hotel, inns, guest house, etc. Now the next entry, you are talking about your passenger transportation services. Entry number 50, passenger transportation services. Now previously, if at all you are going in an airline, which is either embarking from or terminating, either it is starting from or terminating in your sister states. So 8 sister states, we are talking about Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. So 8 sister states plus one more district, Bagdora in West Bengal. So if an airline is starting from this particular place or ending at these particular places, 8 sister states plus Bagdora district of West Bengal, then it was exempted. But now what have they said? This exemption is there only if at all you are traveling in economic class. So they have added a criteria. Exemption is again, scope is reduced. If you're traveling in your business class, then it is taxable. Only if you're traveling in economic class, it is exempted. So if you're going in an airline which is starting from or ending at 8 sister states plus Bagdora district of West Bengal, previously it was fully exempted. So before the amendment, you're going in airline, passenger transportation services, you're talking about 8 sister states. 8 sister states plus Bagdora district of West Bengal. Right, you're going in airline. Whether it was economic class or other than economic class, things are the same. So whether it is economic class or other than economic class, things were exactly the same. There was no GST. Now what is the amendment that they have brought? They are telling that if it is economic class, again exemption will remain the same. But if it is not economic class, then GST will be applicable. This is the amendment. Right. So if we are talking about an airline where you are talking about an airline which is embarking from these 8 sister states or Bagdora district of West Bengal or terminating at starting point or ending point. Now if it is economic class, exemption remains the same. But if it is not economic class, then now you will be having GST. GST will be there. So exemption scope is reduced, taxable has been increased. So that is there in your passenger transportation services. Right. Next, you are talking about your goods transportation services. In your goods transportation services, one of the entry that was dealing with your GTA we have already discussed. So entry number 21 we have already discussed. Entry number 20 deals with your rail and vessel. So when you're talking about transportation of goods by rail or vessel, it was exempted for certain specified goods. From that list, railway materials or equipments is removed. Railway equipments or materials is removed. Now it is taxable. So if you are transporting railway equipments or materials from these from rail or vessel, it is taxable. Rather, let me explain in a different simple manner. Previously, if you are transporting, there are 6 specified goods. You are talking about rail or vessel. You are talking about GTA. Previously, for rail or vessel, 6 specified goods plus an extra item, railway material or equipment and others. And same way you are talking about 6 specified goods, railway materials or equipments and others. Now if you see, they have actually made the taxability portion same for rail and vessel as compared to GTA. Previously, when you are talking about your transportation of goods by rail or vessel, if it is 6 specified goods, there are a list of 6 specified goods which is talking about say agricultural produce, food grains including 4 pulses, rice, etc. There are 6 specified goods. So there is no change in that. Previously, transportation of that was exempted. If it is railway materials or equipments which are transported by rail or vessel, it was exempted. If it is other goods, it was taxable. If the items were transported by goods transport agency, if it is 6 specified goods, it was exempted. But if it was railway materials and equipments, it was taxable. Other items, it was taxable. Now you will find that if it is 6 specified goods, whether it is transported by rail, vessel or GTA, it was exempted. If it is other goods, whether it is transported by rail, vessel or GTA, it was taxable. But the difference was for railway materials or equipments. If railway materials or equipments were transported by rail or vessel, it was exempt. If railway materials or equipments was transported by GTA, it was taxable. Now what have they done? They have said that this exemption is no more valid. Even if you transport railway materials or equipments from by your rail or vessel, it would be taxable. So now things are the same. Even when you are transporting your railway materials or equipments by your rail or vessel or by your GTA, it is taxable. Things are the same. Again, exemption is reduced, taxable portion is increased, but when you on a comparative basis, you'll find okay, if I'm transporting 6 specified goods by rail, vessel, GTA, exempt. If I'm transporting other goods, including railway materials or equipments by rail, vessel, GTA, it is taxable. It is taxable. So that amendment they have brought. Now, sports services. You'll find two amendments in your sports services, one in entry 80 and one in entry 82A. When you're talking about entry 80, that is a well thought process amendment. Now, previously, what were the wordings? Let us see that entry. Service by way of training or coaching. Again, you're talking about training or coaching services, but it should be in recreational activities. For recreational activities related to arts or culture, exempt. Related to sports, it is exempt only if it is by a charitable trust under 12AA or 12AB. So that was the entry. Now what is the entry after the amendment? They have said that service by way of training or coaching, that remains the same. Now what they have done, see, sports nowadays is not merely a recreational activity. It is not only an extracurricular activity, it is the main activity. You can have a career in sports. So they understood that, they said that okay, sports will not put it as a recreational activity. For arts or culture, recreational activities for arts or culture, it is exempt if it is by an individual. For sports, they no more call it as a recreational activity. For arts or culture, still they call it as recreational activity, but for sports, they understand that there's a huge scope or career. You can focus on sports as a career. Therefore, they remove the term recreational activities from sports. Earlier, recreational activities was a common term used for arts, culture, sports. Now, recreational activity is only connected to arts or culture. If it is sports, the reference of recreational activity is removed. Again, if it is by 12AA or 12AB entity as per your income tax act, it is exempt, otherwise it is taxable. Now, let us try to understand the exemption, what has come out. Before the amendment, if you are talking about your recreational activities, whether you are talking about by way of arts, culture or sports. Right, arts, culture or sports. Now, how it was divided? The recreational activity for arts and culture, recreational activity for sports, recreational activity for arts or culture, recreational activity for sports. Recreational activities, if it is by way of art or culture, it was exempted. Nothing more, no more criteria. If it is for sports, then you need to ask whether it is by 12AA entity, 12AB entity, or whether it is by others. If it is by 12AA, 12AB entity, it is exempted. If it is by others, it was taxable. Now, this is all before the amendment. What have they done after the amendment? After amendment, first, only for your arts and culture, they are talking about recreational activities for arts, culture. For sports, they don't use the word recreational activity. Sports. That is one small change. Second, when it is arts and culture, they tell that whether it is by individual or others. Only if it is by an individual. It should not be by a partnership firm or a company or LLP. It should be by individual. Only if it is by individual, now it is exempted. Otherwise, if the recreational activities in arts and culture is by a partnership firm or an LLP or a company, whether private limited or public limited, or if it is by an association persons, in all these scenarios it is taxable. Again, scope of exemption is reduced. If it is sports, there is no much change. Same thing. You have to ask whether it is by 12AA or 12AB entity, or whether it is by others. So it still remains the same. If it is by 12AA or 12AB entity, it is exempt. If it is by others, it is taxable. See, for sports, they have removed the term recreational activity. Taxability impact is no more changed. If it is by 12AA entity or AB entity, except if it is by others, it is taxable. For your arts or culture, exemption is only when it is provided by individual. So they have changed that scope. Exemption is only when it is provided by individual. So again, exemption scope is decreased, taxability portion is increased when you talk about recreational activity by arts or culture. So that is all about this particular sports amendment. The second entry amendment is not so significant. It is only trying to tell that when you're talking about entry 82A, when you're talking about your right of admission to the event organized for FIFA Under 7 Women World Cup 2020, which is not yet come, it will be rescheduled. It will be rescheduled in India. Whenever it is rescheduled and whenever that event happens in India, you're talking about FIFA Under 17 Women's World Cup 2020, which is not yet happened, which will happen anytime soon. So whenever it is rescheduled, the ticket fees would be exempted. So they have just added the word whenever rescheduled. It is not yet scheduled. So whenever it is rescheduled, the ticket fees for women's FIFA Under 17 Women's World Cup would be exempt. So that they have added the term whenever rescheduled, not much significant. Now healthcare services, there is a drastic amendment that has come out. So when you're talking about your healthcare services, they have changed a lot. There's a change in entry number 73, 74 and 75. Now 73, what they have done, exemption which was previously available for cord blood banks by way of preservation of stem cells. Exemption which was given to cord blood banks. Now that exemption is removed. Service provided by cord blood banks by way of preservation of stem cells or any other service in relation to such preservation. Previously it was exempt, now it is taxable. Now another service which was given by operator of a common biomedical waste treatment facility. Service which was given by the operators of common biomedical waste facility treatment facility, which was given to basically clinical establishments. So there will always be a biomedical waste which someone will take and dispose it of, and they will take the charges from the clinical establishment. Previously that was exempt, now it is taxable. Now we are talking about services by clinical establishment, hospitals. Services by clinical establishment or your authorized medical practitioner. And there was another exemption you're talking about your clinical establishment, authorized medical practitioner or paramedics. Whenever they are giving some services, it is exempt. But now there's an amendment for clinical establishment. Only for, not for the authorized medical practitioner, that is doctors or paramedics, you're talking about physiotherapists, not for them. Specifically for your clinical establishment, that is you're talking about your hospitals, exemption will not be applicable, provided that nothing in this entry shall apply, which means the exemption shall not be there. If at all it is provided by a clinical establishment, which means your hospitals, by way of providing room, where the room rent charges are more than 5,000 per day. But wait. They have said that okay, room rent charges can be more than 5,000 per day. If at all you are talking about ICU, intensive care unit, CCU, critical care unit, ICCU, intensive cardiac care unit, NICU, neonatal intensive care unit. If at all you are talking about ICU, CCU, ICCU and NICU, then whether the room charges are up to 5,000 per day or more than 5,000 per day, it still remains exempted. But if at all you are talking about other category, then you have a change. Now basically, if you were to understand the changes which has happened in your healthcare services. So previously you had exemption when you're talking about cord blood banks. Now it is not there. Previously you're talking about operators of biomedical waste treatment facility. Those who are giving that biomedical waste treatment facility, they were having that exemption. Now it is not there. Previously for clinical establishment, hospitals. For authorized medical practitioner and paramedics, there is no change. So we'll be discussing where there is change. So when you're talking about clinical establishment, whether we were talking about your ICU or CCU or ICCU or NICU, others, right? Others means you can talk about a scenario where the amount is up to 5,000 per day, or you're talking about a scenario more than 5,000 per day. Now you'll see that things have drastically changed. Previously, when you're talking about cord blood bank units, it was exempt. Operators of biomedical phase treatment and facility, it was exempt to clinical establishment. By operators of biomedical waste treatment facility to your clinical establishment. By clinical establishment, whether it is your ICU, CCU, ICCU or NICU or others, whether the room rent is more than 5,000 per day or less than or equal to 5,000 per day, everything was exempt. Everything was exempt. Now things have changed. Now understand that services by cord blood banks for preservation of stem cells, now it is taxable. Exemption is gone. Services by operators of biomedical waste treatment and facility, now it is taxable after the amendment. Now when you're talking about clinical establishment, if it is with respect to your ICU, CCU, ICCU or NICU, irrespective of the room rent charges, whether it is up to 5,000 per day or more than 5,000 per day, it was exempt earlier, now also it is exempt. And if at all you're talking about others, if the room rent charges is up to 5,000 per day, then it is exempt. But if the room rent charges is more than 5,000 per day, previously it was exempt, now it is taxable. So services by cord blood banks has become taxable. By operators of biomedical waste treatment facility has become taxable. By clinical establishment, where you're talking about other than your ICU, CCU, ICCU or NICU, where the room rent charges is more than 5,000 per day, it has become taxable. It has become taxable. That is the impact of amendment in healthcare services. Again, the exemptions are decreased and taxability portion is increased for your healthcare services. Now, when you're talking about your agricultural services, so next service which we are talking about is your agricultural services. Impact on your agricultural services. Now, there's an amendment in your entry number 24B, your 54, 53A. 54 and 53A basically both the same amendments, and 56. Now, what is the amendment in entry 24B? Previously, when you're talking about the services of storage and warehousing of cereals, pulses, fruits, vegetables was exempt, is still exempt. But when you're talking about storage and warehousing of nuts, spices, copra, sugarcane, jaggery, raw vegetable fibers such as cotton, flax, jute, indigo, unmanufactured tobacco, betel leaves, tendu leaves, coffee, tea. These are all previously exempted. What services were exempted? You're basically talking about your storage and warehousing services, not any other services. Now, storage and warehousing services of what exactly is still exempt is only limited items. Cereals, pulses, fruits, vegetables. Repeat: cereals, pulses, fruits and your vegetables. Only these items. So it is cereals, pulses, fruits and vegetables which is still exempt. Everything else is taxable. So a lot of items were there. So after the amendment, things are very simple. If there is a storage and warehousing of agricultural produce or cereals, pulses, fruits and vegetables, others. Agricultural produce, obviously, not only storage and warehousing, other services are also, many other services are also exempted. So here, when you're talking about if it is of agricultural produce, it was exempt, it is still exempt. Cereals, pulses, fruits, vegetables, it was exempt, it is still exempt. Others, there were few items which were exempted. We say, for example, storage and warehousing of nuts was exempt, now it is taxable. Spices, copra, sugarcane, jaggery, raw vegetable fibers such as cotton, flax, jute, indigo, unmanufactured tobacco, tendu leaves, coffee, tea and all, betel leaves, they were all exempted. Now exemption is removed. So storage and warehouse of agricultural produce still is exempt. Of your cereals, pulses, fruits, vegetables, still is exempt. Storage, warehousing of any other item, including that nuts, spices, copra, sugarcane, jaggery, etc. Any other item is taxable. That is the impact of amendment in 24B. What is the impact of amendment in your entry number 53A and 54? Now, there was an exemption which was given for fumigation in warehouse of agricultural produce. So, when you're talking about fumigation in a warehouse of agricultural produce, fumigation of agricultural produce in a warehouse, previously it was exempt, now it is taxable. Fumigation, there is a process called as fumigation of agricultural produce in warehouse, previously it was exempt, now it is taxable. And likewise, slaughtering of animals. So if you are talking about service by way of slaughtering of animals, previously was exempt, now it is taxable. So fumigation of agricultural produce in warehouse was exempt, now it is taxable. Slaughtering of animals previously was exempt, now it is taxable. So again, taxable, you will all find the taxability scope is increased and exemption scope is decreased. So that was all about your agricultural services. Now you are talking about your exemption in tour operator services. Exemption and talking about your tour operator services. The interesting entry 52A. Tour operator services which is given to a foreign tourist for partly in India and partly outside India. To the extent it is performed outside India, it is exempt. Previously, if you are talking about services by a tour operator to a foreign tourist for tour exclusively outside India was exempt. Now they are telling that you are giving services to a foreign tourist for partly in India, partly outside India. We are going to make it exempt to the extent it is relating to partly outside India. Now, what proportion? What value will be exempt? In the proportion of the total consideration charge for the entire tour multiplied by number of days outside India divided by total number of days. So take the total value, take the number of days outside India to total tour divided by total tour days. That on one side. Other side 50% of the total consideration. That is on the other side. Whichever is less would be exempt. So they are talking about total tour value multiplied by number of days outside India divided by total number of days, or take 50% of the total value of consideration. Whichever is less would be exempt, balance would be taxable. And when you are talking about calculating the number of days, if at all your spent duration more than or equal to 12 hours, it will be considered as one full day, and if it is less than 12 hours, it will be considered as half a day. So when you are calculating the number of days outside India and total number of days, if at all the spent number of days outside India in foreign country you have stayed for 3 days 13 hours, it will be taken as 4 days. If you have stayed for 3 days 7 hours, it will be considered as 3.5 days. So that is exemption. And who is a foreign tourist? They have explained, it has remained the same. Foreign tourist means a person who is not normally resident of India and who stay in India is up to 6 months, not more than 6 months, for legitimate non-immigrant purposes. Now let us understand this exemption by this chart. If you are talking about tour operator services, just bifurcate that. First you are talking about foreign tourist, and you are talking about Indian tourist. You are not a foreign tourist, you are an Indian tourist. If at all you are talking about a foreign tourist, things are different. For Indian tourist, things are different. For foreign tourist, categorize them into 3: wholly outside India, wholly in India, partly outside India plus partly in India. For Indian tourist, same: wholly outside India, wholly in India, partly outside India plus partly in India. You are dividing that into same categories. If at all you are talking about an Indian tourist serves by a tour operator to an Indian tourist, please understand that it is taxable under all the situations. Whether it is for wholly outside India, partly outside India, partly in India, or for wholly in India, GST is there. If at all you are talking about a foreign tourist, if it is for wholly outside India, it is exempt. If it is for wholly in India, it is taxable. Now, what is the amendment exactly that they have brought in? If it is partly outside India, partly in India, previously it was taxable. Now what they have said? No. Now it will be partly taxable and partly exempt. This exemption is very peculiar because you are talking about first such exemption where you are talking about partly taxable and partly exempt. That is the amendment that they have brought. So if you are talking about service by a tour operator to a foreign tourist, where it is partly outside India, partly in India, previously was taxable. Now it is partly taxable, partly exempt. Now, how it is so? They are supposing, I'll just take one example to explain whatever they have said. Supposing the total tour charges, you're talking about this particular scenario. Total trip charges. Is say 1 lakh rupees. Total trip charges is say 1 lakh rupees. And that is for USA 3 days, 17 hours plus balance India. So total trip was for say 10 days. Total trip was for 10 days, out of which in USA it was 3 days, 17 hours, and balance in India. Now what are they trying to tell? How to calculate exemption? Take total 1 lakh rupees multiplied by, you are going to take number of days outside India. 3 days and more than equal to 12 hours will become 4 days. 3 days and more than equal to 12 hours. If it is less than 12 hours, it would have become 3.5. It would have become 3.5. Now it is 4 divided by 10. If it is 3 days, 10 hours, it is 3.5. If it is 3 days, 17 hours, it is 4. It is 4. So either it would be 3.5 or 4. Yeah, in this example, it is 3 days, 17 hours, therefore it is 4. Right, let me take this example. Just understand this. This is first part. So you'll get 40,000 or 50% of 1 lakh. You'll get 50,000. Whichever is lower. So which is lower? You'll find that this is lower. So and not this one. So what is exempt? 40,000 GST will not be there, and balance 60,000 GST will be there. So what you have to do, take the total trip charges multiplied by the number of days outside India divided by total trip days. When you are taking up multiplied by number of days outside India, if it is 3 days 17 hours, it is 4 days. If it is 3 days 10 hours, it would have been 3.5, not 3. 3 days 10 hours would have been 3.5. Take that value, and on the other side, take the entire trip value multiplied by 50%. See which is lower. In our example, 40,000 is lower. So what is exempt is 40,000 is exempt, balance 60,000 is taxable. So that is the way you have to calculate the exemption. The only one service where you find partly taxable and partly exempt. That is all about your tour operator services. And your examples are also given an explanation. That example will be more than sufficient for you to understand. And you're talking about your residuary services, balance residuary services. You'll find a lot of exemptions have been removed. Previously, services by RBI. Services by RBI was exempt. Now services by RBI is taxable. Previously, services given by RBI was exempt. Now services given by RBI is taxable. Previously, services given from outside India to RBI in relation to management of foreign exchange reserves, both are related to RBI. So entry number 26 and 42. Both are related to your RBI. One is services given by RBI. Previously it was exempt, now it is taxable. Second is services received by RBI from outside India in relation to management of foreign exchange reserves was exempt, now it is taxable. So services by RBI taxable, services received by RBI from outside India, which is import of services for management of foreign exchange reserves, which was exempt earlier, now it is taxable. So any service given by RBI taxable, any service received by natural is simple. Any service given by RBI taxable, any service received by RBI is taxable. Any service given by RBI is taxable, any service received by RBI is taxable, whether from India or from outside India. Now, other exemptions. Services given by IRDA, Insurance Regulatory and Development Authority, was exempt, now it is taxable. Services given by SEBI, Securities and Exchange Board of India, previously it was exempt, now it is taxable. Previously, services given by FSSAI, Food Safety Standards Authority of India, it was previously exempt, now it is taxable. Previously, services given by GST network to government was exempt, not as taxable. So you will find that services by IRDA or SEBI or FSSAI or GSTN, these four categories, they were previously exempt, now they are taxable. So entry 26 and 42 is all related to RBI. 32, 33, 41 and 51, they are talking about your IRDA, SEBI, FSSAI, or you are talking about your GST network. Previously they were all exempt, now they are all taxable. So look at this way: RBI portion, services by RBI taxable, received by RBI taxable. Nothing is exempt for RBI. For your others, services by IRDA or your SEBI or your FSSAI or your GST network, previously they are all exempt, now they are all taxable. So that is all about your amendments which have come out in your exemptions and in your ASIM. If you see all the amendments that have come out in your exemption, you will find one common point: government has reduced the exemptions and increased the taxability. Government has reduced the exemption and increased the taxability. Whether you talk about residential services or tour operator services is the only place where government has given some exemption. Or you are talking about agricultural services, healthcare services, port services, transportation of goods, transportation of passengers, renting of immovable property or government services. In all these exemptions, you will find that government has decreased the exemption scope and increased the taxability. Only in one place, government has given some more exemption, that is for tour operator services to a foreign tourist, partly in India, partly outside India. Only in that place, government has given an exemption which was not there. In all the other cases, government has slashed down the exemption and made it more taxable.